All right. Hello, everybody. Thank you so much for joining in today for another AMA here on the Polygon Discord. My name is Zonzi, and today we're speaking with BonqDAO. Really excited to have these guys here. I'm a big fan of this project. I think it's really cool. So without further ado, I'll let you guys introduce yourselves. Let us know a little bit about, what's your background? What were you doing before crypto? What got you into the space? And, what led you to BonqDAO?
Delia, are you with us? Can you start the intro?
Hey everyone, can you hear me? Sorry, I was a little bit late logging in. Can everyone hear me?
Yeah, we can hear
Loud
you.
and clear.
Okay, perfect. So I'm Delia Sabau. I'm one of the kind of leaders in the BonqDAO. I'm the CEO. I spent the last kind of 20 years in the traditional finance, so I come with kind of traditional finance background, and moved into the DeFi early last year. My background has been all in the hedge fund industry, building equity strategy, trading, learning kind of and executing all those long, short equity funds. Moved into the DeFi, very interested in blockchain, and moved into the DeFi early last year, joining the Bonk team, Micha and Michal. And what we are trying to do here is building this self-sovereign finance solutions. So everybody that owns any digital assets can borrow against their own assets at 0% interest rate. So I'm going to pass it to Michal so he can introduce himself.
Thank you. Michael Bacia, that's in English, Michal in Polish. I'm the token economist. Well, I'm an economist with a master's degree in managerial economics who happened to also do a lot of token design and token economics. My professional background before blockchain was mainly project finance and project management. In 2017, I stumbled upon the thing called blockchain, and it was Ethereum specifically with smart contracts. I was fascinated by the idea of being able to create incentives and socioeconomic gain that then is put into code and is self-executing on chain in a centralized fashion. So I was hooked. I worked with several crypto projects and enterprises in order to help them shape their token economics, incentive structure, monetary policies, this kind of stuff. Last year, in January, together with Micha, we launched BonqDAO because we thought that the idea of having a solution that is completely permissionless and decentralized to the problem of liquidity can be quite an interesting solution for a lot of projects. So, Micha, over to you.
Thank you. The name is Micha Roon. I studied computer science in Lausanne in the early 90s. And I've been software engineer, project manager for the financial industry in Switzerland, mainly until 2015 when I discovered Ethereum and I got hooked on smart contracts. And I've been a smart contract developer since 2016, pretty much full time. Joined a bunch of early crypto projects, created a few tokens, and I met Michael in working on SweetBridge, one of the early projects that didn't go so well. I continued doing some leadership positions for different blockchains. The latest was with the Energy Web Foundation, where I led the tech team for the Energy Web chain. And as Michael mentioned, early last year, we launched BonqDAO with the vision to to change things in DeFi, to merge DeFi and traditional finance, to not copy the traditional finance systems, but to innovate, create something new, and give people the tools they need to be self-sovereign with their finances. And that's it for me.
Thank you, Micha. I guess now we can actually move to the mission and vision, right? So everybody's kind of asking us, what is BonqDAO? What do we really try to achieve with BonqDAO? And our mission is very simple. We just really want to give people and businesses the tools that they need to be self-sovereign when it comes to their on-chain liquidity. And what we mean by that is that all of us own assets that are illiquid, that we can actually go right away easily sell them or exchange them for fiat, especially in the digital markets. And we want to provide all the tools that when you need liquidity, you can actually access liquidity out of those assets. The proposition is very simple. The implementation is a little bit harder. So this is where actually we need to put our brains and figure out how we can actually build a system that doesn't really has a systematic risk. And people can actually come to us easily and we can actually assess the risk associated with those assets. The vision is that at some point, which is in the near future, all chain assets, including all the tokenized real-world assets, have easy access to self-sovereign liquidity. And again, we want to be part of that. We want, as Micha was mentioning, we really want to bridge the traditional finance instruments into the DeFi, in addition to all the current digital assets. So now it takes me to what is Bonq, and I hope that everybody can actually see the slide that we have with the Bonq ecosystem overview. So at its core, Bonq is an over-collateralized lending with 0% interest rate. So we accept whitelisted collateral and we issue B-Euro, which is a stable coin pegged to euro. However, Bonq is built, I would say, as a next generation of lending protocol because it's going to open up the debt market to a wide variety of DeFi protocols, not only the blue chip ones, which right now they're the ones that actually have access to borrow against their own assets. So the true power, I would say, for Bonq is the risk management platform, and we tried kind of to be as thorough as we can, and as creative as we can, to make sure that we cover all the aspects of the risk management in the DeFi. So we use an on-chain data to come up with a risk score for the protocols that want to have their tokens whitelisted on Bonq. The risk management, I would say, is the backbone right now of the Bonq success. And the main reason I said that is because we need to keep in mind that the whitelisted tokens could affect the protocol, and the stablecoin B-Euro at its core is critical to build a robust and systematic risk model, right? So once a token is whitelisted on the risk management by the risk management platform, protocols or users, the communities that come with that particular protocol, can use the lending and borrow against their own tokens. You can see that we have some automatic liquidation, which are backed by the stability pool, and we use the pricing feed that comes directly from Chainlink Oracle. And once you create a trove and you borrow against your own token, you mint the B-Euro stablecoin, which is pegged to euro. On top of that,
it's a 0% interest, right?
And it's a 0% interest rate. And on top of that, we try to build, and we are currently building 3 different solutions layers. The main one is the protocol own liquidity. So protocols can come to us and using our lending protocol can actually generate their own liquidity on the market without kind of heavily incentivizing LPs. We create yield strategies, and we also try to help protocols to have a better treasury management, to be more diversified, and really weather those type of markets, volatilities in the markets by diversifying and using B-Euro.
So Delia, who would be the model user as a protocol?
Sorry, who will be? I lost it.
Who would be the most likely user of
So
Bonk?
the most likely user. So we all kind of, if you look at the DeFi environment and ecosystem, you see a lot of protocols that have their treasury, which is composed by 90% or even 99% of their own token. And the way it works right now, most of them have to sell their tokens to pay their bills on a monthly, or they need to again sell their native tokens to diversify and make sure that they're not as correlated, or they don't use so much value when the market goes down. So yeah, so those will be kind of our top users, mostly the Web3, any protocols that have native tokens. They can come to us. We can take a look at their profile. We can whitelist the token if it passes all the risk requirements. And then once the token is whitelisted, the community that owns those tokens can actually take a benefit from the Bonk lending protocol. Now, if we, so thank you for moving and putting that slide about who should use the Bonk. Yes, the token holders, the blockchain protocols and the projects, and then the treasuries that want to diversify their concentrated portfolios. Now, if we move to the next slide, Michal, actually, you can take it over as the token economics and explain what the BNQ utility token is and what are all the benefits for holding.
Yeah, so we have a dual token design for our protocol. So we mentioned BonqEuro. This is a stable coin that is over collateralized on chain. It's completely non-custodial and completely decentralized. But basically, it means that users who want to create BonqEuro, they do it using their own assets. They're not sending those assets to any treasury that the protocol holds, nothing like that. They are just interacting with their own individual smart contracts. We call them troves. And then they can mint BonqEuro at a 0% interest. And the other token that we are using, it's called BNQ, and it's a utility token to orchestrate the DAO, the protocol, and the ecosystem. So the primary utility of BNQ is to give users cashbacks. So all the fees the protocol is gonna charge are channeled back to the cashback pool, and then people who stake BNQ have the ability to earn those fees and those cashbacks. Basically, they're streamed in real time. So if you are staking BNQ and protocol generates fees, you get a portion of those fees. And there are no lockups. There is, let's say, no cooldown periods. You have, let's say, full ownership of those tokens. As long as you want to stake, you earn the cashbacks. And why we call cashbacks? Because you cannot just generate passive income by staking BNQ. You actually have to be user of the platform. So those BonqEuros that come in as fees, then they are distributed to BNQ stakers, but only as a credit to their trove, which basically means that if you have a BonqEuro loan, then you can use those cashbacks in order to pay back those loans automatically. But token holders who don't have troves, who don't put assets, who basically don't participate in the ecosystem, they don't get to earn any of this. And we're doing it because we really want to prevent extraction of value from the ecosystem, and well, definitely users who have a lot of BNQ and a lot of assets, they benefit the most. However, they also have to participate, and they also contribute in fees back to the protocol, back to the community. Right? And let's say two other features of the token. We're gonna use it for governance. Basically, we require a stake of BNQ when a token is new token is added to the whitelist, and then there will be an additional functionality of having redemption insurance. So basically, people will be able to stake BNQ, and then when the redemption happens against the trove, they collect all the fees, so they can basically buy back their assets at the profit. And now, how does it? How do we make money? That's always a good question, right? If we are zero interest protocol, we are never going to charge people for using Bonk protocol more than we have to, and we are charging 0.5% origination fee for minting the debt. But we also understand that a lot of people don't want to sit with, let's say, the laptop open and clicking through MetaMask, depending on how the prices of those underlying assets behave. So we want to introduce a lot of premium features that automate a lot of this stuff for the users. So we're going to offer convenience to our users, and we're going to charge subscriptions for those premium services. And again, all those services go back to the cashback pool, to the BNQ stakers. So if a user is participating in this BNQ staking pool and participates in cashback, then they can easily offset those premium charges using cashbacks.
The other thing I would like to add on top of this is that those premium services actually can help the protocol from a risk point of view, because it can avoid cascading liquidations. So that's the other kind of benefit of having those premium services.
Oh, definitely. So yeah, for example, arbitrage bots will help us maintain the peg, and trove optimization bots gonna make sure that yes, the trove is not gonna be liquidated when I go to sleep and I don't watch the crypto market 24/7. So definitely it's gonna increase the let's say performance of the protocol and decrease the risk for everybody. I agree. Okay, so I don't know, Delia, you wanna brag about a little bit about what we've achieved in
Yeah, so very proud actually. Within 1 month, actually, we are in top 20 on the Polygon ecosystem, DeFi ecosystem. We have more than 11 million TVL. We minted close to 2 million BEuro, 1.7, 1.8. We are definitely increasing our community members in the Telegram. I think a week ago there were 400. Now we are getting closer to kind of 550. We have some Twitter followers. Of course, there is a lot of room for improvement in all those metrics. So far, we have 7 whitelisted tokens. Our main partner is Alliance Block, and LBT is whitelisted as one of the first tokens. We have DAI, ETH, Matic, USDC, and we also whitelisted the LPs that come from the liquidity pool, BEuro, DAI, and BEuro USDC. We can actually say that BEuro remain pegged to euro. We are listed on CoinGecko. You can actually monitor us and watch us. And I think one thing that actually Michal can be very, very proud of with his token economics is that a lot of BNQ got staked. So people really want to take advantage of those cashbacks and earn the BNQ and then stake it, since right now over 80% it's staked in the pool.
That is correct. So, as Delia mentioned, we have a lot of room to grow. We definitely want to be up in the chart of TVL on Polygon. So, we welcome any suggestions from the Polygon community which tokens we should whitelist. And let's say if you're listening to us and you do have your own native token on Polygon or on Ethereum, please get in touch with us. We're gonna run our risk model really quickly, give you the first, say, assessment. We're already in the process of whitelisting several very cool Polygon projects, and we hope we will be able to announce it soon. And I don't know, Micha, you've been quiet. Maybe over to you and tell us what the future holds for the protocol from, let's say, the development point of view.
Thank you. So we deployed in December, on December 16th, actually, and we went through an audit. Obviously, the smart contracts have been audited. All the smart contracts are verified, both on Sourcify and on Polygon Scan. So we have a decentralized repository where our smart contracts are verified. It makes it also easy to download them and to make sure that they are actually what we claim them to be. They are the version 1 smart contracts. So the version 1 smart contracts lack a few of the functionalities we would like to have for whitelisting riskier tokens. And this is why we are actively working on version 2. Which is 90% done, but as every developer knows, the remaining 10% take almost as much time as the first 90. So we will start auditing these contracts for the version 2 in the coming weeks, and we hope to be able to deploy the new version of the smart contracts by the end of this quarter, meaning by the end of March. But this will also let us work on automation. I have to mention that arbitrage is actually already possible. So we have 2 arbitrage contracts. One is the stability pool, where people stake their BonqEuro. This BonqEuro can be used to execute arbitrage on Uniswap v3. And the way that works is that the smart contracts accepts any swap order from anyone, but the swap order needs to result in more BonqEuro than it used. So if you find a path to get more BEuro out of the swap than you put in, it will be a successful arbitrage opportunity. What is missing right now is the sharing of the profit with the caller. So we recognize that it would actually be beneficial for us to benefit from the community knowledge and involve people. And so let people create the arbitrage bots, and we will share in the profits. So we provide the capital and the community provides the brains, which is the way the community should work. Talking about the community brains, we have a bug bounty program that is documented in our documentation site. And we are very happy if people look at our protocol and point us to drawbacks and flaws and issues, instead of taking advantage of these potential flaws and hurting the protocol. We were able to actually fix one issue already that has been mentioned by a community member. It was not an immediate threat, and the threat could be resolved, so no harm done. And the community member was rewarded for their effort of reviewing the smart contract. So the same thing will apply also for the version 2, and we're really happy if people reach out to us and tell us what is going wrong.
Cool.
So
Yes.
maybe before we start asking community questions, just maybe, Delia, you can share our perspective on, let's say, DeFi in general, DeFi and Polygon, and the role of Bonk, because yesterday we saw a very exciting announcement on Polygon Twitter about a institutional fund that is about to tokenize like over 2 billion in assets, right, on Polygon.
Yeah, I mean, I'm very, very impressed, first of all, with Polygon. I have to give the Polygon kind of community hands up on this. You guys are growing significantly, and I really feel like we launched a month ago and we got the support we needed. We are connecting with protocols within the ecosystem, and we are kind of aiming to whitelist several of them within the coming weeks, which is going to grow our adoption and traction even further. So we decided to really be native on Polygon, and I have no regrets with that. And thank you again for the community. As far as kind of where we see Bonk going forward, I mean, I come from a traditional finance, and I really think that there are so many opportunities that you can do. It's a huge market, and we really want with Bonk to provide liquidity to all Web3 on-chain assets. And there is a trend that a lot of kind of more traditional finance assets are really finding their way to be on chain, and we want to be kind of one of the main players there. There are several kind of the market in crypto is very large, but if you really think about how much you can tokenize in the global illiquid assets, that market, we really want to be part of that. So yeah, this is just the beginning of our journey. I'm really, really happy and proud with the team that we have, because I think we are all so complementary in what we bring to the table. We have very kind of solid professional team, and I think with that we can actually achieve the mission. Maybe not the next month or two, but yeah, definitely within a year we'll show a lot of results there. So let's bonk together.
Let's bonk! I love that hashtag.
Excellent. So we have 2 questions. So Frankie, any burn feature? So no burn. So maybe let's be clear. Bonk Euro, of course, there is a mint and burn because it's a variable supply token. So in order to maintain the peg, the supply has to meet the demand. So yes, absolutely. With Bonk Euro, it's a mint and burn contract. BNQ is a token that has a fixed supply of 1 billion tokens, and we decided not to introduce any burn mechanism for 2 main reasons. One is compliance. A lot of buyback and burn mechanisms can be considered, let's say, borderline security. We want this to be as, let's say, plain and vanilla utility token as possible. The second reason is that I personally don't like burn mechanisms that all they do is just transfer value from users to people who just hold token in their wallet and I'm not using it. So we don't want to do it. We want people to stake in a cashback pool and then use the protocol as much as possible, and then tell everybody else about using the protocol as much as possible, and then let's say share the value that the whole protocol is creating. We don't want a situation where somebody just has those token in their wallet and just profits from the fact that other users create this revenue stream for the burns. So another question, are you planning to list tokens on an exchange? Absolutely. Right now we are on Uniswap, on Polygon, and there is a liquidity mining campaign ongoing where people can provide Bonk Euro and USDC and Bonk Euro and DAI. And other than trading fees, we also reward people with BNQ tokens. And there is a BNQ to Bonk Euro liquidity pool, which I would say for a brand new project like us, I think it has even decent level of liquidity, and there is some volume going on, and the token price didn't go down to zero, so I mean that's pretty cool. But yeah, definitely as we grow and we have more users and we have more whitelisted token, we're gonna look into whitelisting, into listing our token on other exchanges, also centralized. Here's a great question. Is there an advantage for the token to be whitelisted early? Yes. So because we are early, we have first quarter special. We're not going to be charging any listing fees for whitelisting the token, and we're also going to provide this BNQ stake ourselves for early adopters.
Hey, I've got a question. What are all the whitelisted tokens right now that you can use to mint B Euro?
Right now we have Matic, obviously. Then we have DAI, then we have USDC, we have ETH, and we have Alliance Block tokens. And all of these tokens have to be on Polygon, obviously. So your ETH and your USDC and DAI, you need to bridge from Ethereum. Same as ALBT. And other than those 5 tokens, we've already whitelisted LP tokens for BonqDAO and USDC. So if you provide liquidity to the Bonk Euro DAI or Bonk Euro USDC, then you can take the LP token, use it as collateral, and get some more Bonk Euro and do whatever you want with this. Buy BNQ or provide more liquidity.
Yeah, 2 comments. I really like that you're doing LP tokens as a form of collateral. I think it's awesome having like because LPs they're accruing value from like trading fees, etc. So to have that as a form of collateral is huge. And then I also really like how you called the 0.5% fee a origination fee, because I've heard other protocols call it a repayment fee, and I think calling it an origination fee makes a lot more sense.
Thank you, and we agree. We want to charge people, let's say, upfront for what they're using, and then repaying your debt is it doesn't cost anything. I mean, it's free, and it has to be because it also improves the risk profile protocol. And there is no perverse incentive not to pay back your debt, right? When you should, really. So, well, I mean, we definitely don't want to, let's say, use liquidations as any meaningful source of revenue for the protocol, right? This is the last thing we want to do. Liquidations are there to guarantee the peg and to make sure that the collateralization ratio is healthy at all times. But this is not how we make money. So, yeah, thanks for pointing that out.
Absolutely. And I think another really cool thing to point out, maybe what would you say is like the advantage to taking a loan on Bonk compared to borrowing a euro pegged stablecoin on Aave, like in regards to the interest rate?
Right. So it's a the fundamental difference is that on Aave you need to borrow money from somebody else who's going to charge you interest on it, right? And on Bonk it's not the case. You bring your own asset to your own trove, and then you lock it in a trove, and then you issue yourself liquidity, and the interest rate is zero on Bonk always, right? So you pay the origination fee, but you don't ever have to repay this loan unless you want to withdraw your collateral back. Right? So depending on the interest rate on a particular asset type, I mean, the spread can be quite significant. And I also think that this unlocks quite interesting yield opportunities for people, because what you can do is you can have your stablecoin, USDC or your DAI, bring it to Bonk, use half of it as collateral for Bonk Euro, take the other half, pair it with Bonk Euro, put it in a liquidity pool, and then you're earning trading fees. Right? And because this loan doesn't cost you anything, let's say the spread is, let's say, all the trading fees that you earn are yours. You don't have to pay to capital providers any of this. Right?
Yeah, I would like to add two more actually for a protocol or for the treasury that issues a token that is whitelisted. The main advantage is that you can mint yourself liquidity in indexes, and you can leave the liquidity there as long as you want because you don't pay any interest. And the second one is you can actually pay your bills with borrowed money instead of putting sell pressure on your token. Which is a bit early to do right now, but once we have liquidity, it will be possible.
So I have my favorite question ever. Is Bonk Euro just another algorithmic stablecoin? No, it's not. And subject to the same risks as Luna and other algorithmic stablecoins. No. So the fact that Bonk is Bonk Euro is a native asset of the protocol, I wouldn't necessarily classify it as algorithmic stablecoin in the, let's say, popular meaning of the word. So Bonk Euro is a stable coin that is always over collateralized by external assets. And I couldn't stress this enough, the value of having external assets that have their own market price and market value. Because algorithmic stable coins like Luna, for example, they use their own internal asset over which the protocol has absolute control to maintain the peg, right? And because of this, if as long as people believe that this token is worth something, the peg will be maintained. But the moment people stop believing that this collateral asset is worth anything, it goes down to zero, as we've seen last year in late April, early May. Right? And what Bonk does is using collateral that is external to the protocol, over which the protocol or the DAO has no control. And for example, for this very reason, for example, BNQ is not listed as collateral for Bonk because our token is too young, we have too small volume, and also we control the majority of the supply. So basically, BNQ would never currently at current stage, let's say 1 year after it was 1 month after it was listed, would never pass our risk criteria.
Yeah, we are not going to to list the BNQ right now. I mean, it's not. Yeah, the risk fails.
Exactly. So we eat our own dog food.
Yeah.
Awesome. Have you already did you want to go a little deeper in regards to like the security of the protocol and like any audits you've got done, and maybe talk about a little bit of a deeper dive into just like the chain link oracles and maintaining the peg or whatever. Like I don't know, what kind of steps are you guys taking to ensure the security of the protocol and the users?
Sure. So technically, we selected Chainlink as our main Oracle provider because they are very much trusted in the industry, and we think rightfully so. For tokens that do not have a Chainlink price oracle on Polygon, like the Alliance block token, we use Telor, and we ask the project to fund the Telor oracles. So we have these two possibilities. We can add more, and we also had to get a USD to Euro price feed because most prices are quoted in dollars, but we have a Euro stablecoin, so we needed the prices in Euro. This is for the pricing. So one Bonk Euro debt in your Trove will always be quoted as being valued €1. And this means that if the market disagrees and the Bonk Euro trades at below the peg, then there are some liquidations or redemptions that can occur. I think we don't have the time to go into details, but Michael has shared an article, I think, that details the mechanics of keeping the peg very well.
I'm going to share one right now. But about the oracles, what I wanted to mention is that we are not using any particular swap pool on the DEX. We are actually using a feed from an oracle provider, so either Chainlink or Teller or potentially some other decentralized oracles. And this is to avoid the risk of manipulating the price because the price is an aggregate of many exchanges and many markets on which the asset is trading. And also we're using a time-weighted average. So if there is like a fat finger error that somebody going to place an order and the price going to go down for half a minute, then it's not going to trigger liquidations. So we hope it's going to be safe. So far it's been very safe. So far we were very happy with the performance, and Michal, we also did an extensive audit, right? And
correct. So there has been an audit. Before the audit, we ran some simulations, and we will do the same thing for the version 2. We'll try to run as many scenarios as possible and to be as safe as possible. Obviously, it's software, and software can have bugs. So our contracts are upgradable, which might be considered a risk, and right now they are upgradable by an externally owned address. And in the future, they will only be upgradable by the DAO once we have initialized the governance protocol for the DAO. So it is our goal.
But they're upgradable in the sense that if we make an update to the Trove contract, right? We cannot change those Troves that have already been deployed, right? So
no,
exactly. So
indeed, so not all contracts are upgradable, and the Trove is the main example. So you are the owner of your Trove, and if you are unhappy with the DAO's governance, you can opt out. You can take it out of the protocol, but yeah, I mean, it's better just to close it.
Yeah, but I'm saying if there's a new version of the Trove contract, people have to migrate voluntarily.
Yes.
Right? It's impossible for us to change anything in an existing Trove.
That is correct.
The other thing is that every time we'll do an update to the contracts, we are going to have a thorough audit report. So coming up at the end of Q1, we will have kind of another audit company looking at the contracts again.
Fantastic. There's so many different cans of conversation we can open up. I do want to mention to everyone that if you have any questions for BonqDAO, please drop them in the text channel and I'll make sure to ask them all. One thing that I'm curious about, is there any key partnerships and collaborations that you can share with us, maybe a little alpha?
Well, our key partnership is with Polygon, obviously, but I don't think it's something new. Look, we really don't want to announce what we're working on before we announce, because we really have a pretty thorough risk assessment process, and it's three-part, right? We look at protocol fundamentals. So the team, the problem the protocol is solving, the adoption, token economics, token utility, this kind of stuff. Then we look at technical due diligence, and we look at, let's say, the security and the, let's say, longevity of this particular solution. And then there is the part that the part that takes into account the last 6 months of trading history of this particular asset that we're looking at. And I really don't want to be in a situation where we're going to announce something and then for whatever reason, maybe one of those three aspects is not there yet, that we're not going to whitelist the token.
Yeah.
And then, you know what I'm saying?
Yeah,
So,
absolutely. No, having you guys here and just like learning what BonqDAO is plenty of alpha enough. Totally respect you. Yeah, you got to alpha police. Can't leak too much, right? Totally respect
We
that.
can leak alpha. We can leak alpha. Just follow us on Twitter. Follow us everywhere, and then you'll get the first scoop every time we'll make an announcement.
Awesome. We got someone asking if will there be a testnet? You guys are live right now, correct?
Yes, we are live. Yes, we are live.
So you can actually go to the BonqDAO app today and start using it.
Yeah, and if you are connected to our app.bonqdao.com dApp, you can switch to Mumbai, and there is a smart contract deployment there too. And if you need tokens to play around with it, just drop a message on Discord, and we'll be very happy to fund your wallet with 1 million tokens of your choice. Whitelisted ones, obviously. On the testnet.
One thing that I was curious about personally is just like your thoughts surrounding everything that's going on with MakerDAO. I know like MakerDAO has been like a huge inspiration for a lot of stable coins within the industry, and I don't know, I haven't been keeping up with it too much, but I know there's like a lot going on with MakerDAO right now. I'm just curious if you have any thoughts on the situation there.
look, so first of all, we owe them it's a great deal of inspiration, and what's absolutely awesome about this project is that it's community driven, and that the adoption of DAI speaks for itself, right? It's absolutely brilliant. Now, I'm gonna say something that maybe is not very popular, but if you look at DeFi, which way is evolving, all those projects at some point realized that they need to behave more like a traditional bank or a traditional financial institution. And the same is happening with DAI. And it's interesting because this whole movement of decentralized finance that was born out of the, let's say, protest and rebelliousness against the traditional finance, if you look at those structures that they grow and how they need to start behaving and get regulated and let's say, start making money and all of this stuff, they are more and more like banks. And it's not because banks are evil, it's because we as a civilization have been testing this hypothesis over the last 500 years of banking, and those structures just evolved into this. And what we realized is that the major shift in DeFi is not going to change as long as people are going to charge interest on loans or capital in general. And this is why we came up with this idea of having self-sovereign finance, where you don't need to borrow capital from anybody else because you already have it. And if you're essentially borrowing from yourself, you don't need to pay interest. So, and if you don't have interest, you don't need this to run an organization, then it can be truly decentralized. Right? So everybody can have the same privilege as banks do right now, and basically make their own money if they have assets.
Yeah, one thing that I would like to add, just kind of put it in perspective, is that if you think about the billions of DAI which are outstanding in circulation, for every single DAI, someone actually pays an interest, right? So, and that interest actually is increasing just because the Fed is increasing, right? So on our platform, it's a 0% interest rate. So every €1 out there actually carries a 0% interest rate.
Yeah, that's definitely a huge advantage. Awesome.
But actually, what I like about MakerDAO is that they're also trying to get into the traditional finance. So I think there is a learning curve there, and they've been kind of pioneer in kind of testing it. Of course, we have our own kind of questions about the path that they're taking, but there is someone out there that is really trying to bring on all those traditional finance assets on chain and borrow against that.
Definitely. I don't know. I was just one of my favorite quotes is like, if I've been able to see further, it's because I was standing on the shoulders of giants. And I'm a huge fan of what you guys are doing. Like, I think you guys have a really bright future. There's a lot of like interoperability, composability with your protocol. Like, there's a lot of ways you can collaborate with existing people in the space. So I was just like really curious. I don't know. Like, that was really good answer about like your thoughts on MakerDAO. And I was just like curious about your how you envision the future of Web3 and Bonk's position within it.
Okay, I'll start. We believe very, very firmly that every asset that can be tokenized will be tokenized. It can take 5 years or 10 or 20, but it's completely inevitable, right? And what's going to happen is that you're going to have potentially trillions of dollars of assets on chain, but they all going to be very fragmented, and there will be a lot of those assets, and all of those assets going to need liquidity. And this is what we want to provide for the Web3 ecosystem or industry in general. We want to be the capital provider for the long tail of assets. So thanks to our data-driven formalized risk model, we can actually price those assets, we believe, quite accurately, and provide those sort of liquidity to safe levels. And this is why we think the idea of having over-collateral stablecoin that doesn't require any interest to use it can be very powerful for anybody who wants to tokenize their assets. Because one of the main objectives and rationale for tokenizing a real-world asset and bringing it on chain is to increase its liquidity. We want to be the increased liquidity part of this equation.
Yeah. Also, I believe that technology has a big role to play in DeFi, in the sense that we want to give people the tools they need in order to manage their assets and their wealth, and be able to automate it and remove the middleman and remove the rent seeking. Because if you remove the rent seeking from the banking business and you give the real profits to the individual who has invested, then, well, we would all, as retail investors, get a much better return on our money. So this is also some of my goals to enable people to take advantage of the value of their illiquid assets and get a decent return on their savings.
Absolutely. Let's bonk.
Let's bonk.
Do you guys have we are starting to run up on time. Is there anything else that you guys wanted to cover that's especially important that we haven't already had the chance to? All right. Well, I do want to mention we have a POAP form in the chat. So if anyone would like a proof of attendance protocol NFT to commemorate your attendance here today, just put in your wallet address and I'll get that sent to you. And where's the best place to follow up with you guys and follow up with BonqDAO and get involved?
So you can definitely go to our Discord. That's probably the easiest if you're already on Discord. And Nenad, would you mind sharing the link in the chat for everybody to join our Discord? There you go. Thank you. And then Twitter and on Discord, I think we're pretty accessible. If you have any questions or you want to chat with the team directly, then we're open to discussions.
Awesome. Well, I gotta say, it's been an absolute pleasure having you guys here speaking with the Polygon community. You're all very insightful, very knowledgeable. So yeah, it was awesome learning about you guys and BonqDAO. And yeah, I'm really excited for everything that you guys are going to bring to the DeFi space. So this has been huge. Thanks again.
Thank you so much for having us. Thank you.
Thank you, everybody, for great questions.
Absolutely. You're welcome back anytime. And thank you so much, everybody, from the Polygon community for attending this. It's great having all of you here. So many familiar faces, and I really appreciate all the awesome questions. And yeah, with that said, I guess that concludes the AMA. So I wish you all a wonderful day, and goodbye.
Thank you. Bye, everyone.